Good morning, Steve Free in Chicago with the morning grain comments. Hope everybody had a safe weekend. It's Monday morning, and we'll be watching to see what the USDA does with crop ratings and progress. Everyone's looking for maybe a steady, maybe a 1% drop in crop ratings, and we'll see how much winter wheat got planted and just how far along maybe the corn harvest is. As far as weather is concerned, Midwest should be mostly clear over the next week. Down the road, it might be a mixture of some shower activity. But right now, most of the rain is on the Texas coastal areas, Louisiana, and eventually into the Delta. Not expected to be a lot of damage in the Louisiana area, but the rains could slow repairs of the elevators, and then in the Delta, it could slow harvest there. As far as global weather is concerned, still kind of dry in the Black Sea areas. There might be a few showers in the second week of the forecast, and the northern two-thirds of Brazil is also dry. Overnight, we've got beans down about 6 cents, corn 5, and wheat anywhere from maybe 4 to 6 cents. And I think we started out a little bit higher overnight, but turned lower on the fact that I think the trade looked at the USDA's Friday's report and the fact that they raised corn and bean carryouts and lower the wheat carryout just a little bit, probably has the funds on the sideline as far as buying yet. We're also looking to see what the COVID virus spread does to our economy and what it does as far as food and fuel demand. We'll be watching U.S. Inflation data this week. Right now, stocks are higher, dollars higher, crude's higher, but the gold's a little bit lower. We'll also be seeing at the farmer sells at harvest time and what it does to basis spreads and also futures, and then see if there's any post-harvest bounce in prices, because even with these higher carryouts, they are tight, and there is some talk that because of the dry end in August, we actually could see yields for corn and beans below what the USDA said in their September report. Dalian futures kind of mixed with beans and corn and meal higher while the veg oils are lower. And there is a tropical cyclone in the area of Shanghai that could shut the ports down for 3 or 4 days. I think the funds are also worried about the Gulf export elevator situation, and it might take a little bit longer than some people thought at getting back up to normal. That could slow U.S. exports. We are competitive as far as corn prices are concerned to the world, and maybe even beans until the Brazilian harvest. But the USDA down the road is looking at some pretty big increases in 2022 crop sizes based on normal weather. La Nina might throw a wrinkle in that for as far as southern Brazil, northern Argentina, and even the southern half of the U.S. in the spring. So we'll see how that impacts prices. So again, watching money flow. Funds are not interested to buy the grains right now. We'll look to see what kind of harvest yields we have, what kind of farmers selling we have, and what influence the virus and the outside markets might have on grain prices. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.